Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the independent speculator.com. Welcome back to the show, Lobo.
Great to be on again, Jim.
Lobo, you were saying it's interesting how the markets jerk to the tweet kind of thing, how they can drop or fall over one simple message on social media. What's it like being a trader or a speculator trying to do something positive in that kind of an environment?
Yeah, it's the really crazy thing about it is that if only it were consistent. Like, we could argue that a tweet shouldn't matter. A tweet isn't necessarily policy. Well, I guess there are times where the President of the United States has announced fairly major policy initiatives or changes via tweet, which is an interesting aspect of the 21st century we live in. But there are other times where it's just moaning and griping, really. It's just, I wish it was this way. The latest example of the Fed should drop interest rates to 0 or less. That's not an announcement of a policy initiative. That's just the President expressing his heartfelt desire. But what I was saying, though, is that, there are times where he says something like that and the markets rally 800 points or drop the same amount based on just a tweet. And there's other times where he'll say something pretty substantive and things hardly change at all. Today the markets are up, but they're not up by leaps and bounds. Gold is rallying a little, but nowhere near as much as you'd think if that tweet actually carried some kind of punch. So where does this all leave us? As investors and speculators out there, the main thing I would say is just to be very cautious with these tweets. You can't ignore them. They are input. They are data. They do tell us something. But be very careful about treating them as investable events because they don't always deliver in the way you might expect.
Are we getting closer to a China-U.S. trade deal? China, last week or the week before, did not have retaliatory tariffs when the U.S. increased tariffs on Chinese goods. And today they announced that they're actually removing a little less than $2 billion worth of tariffs from U.S.-made goods. So is this a good sign that the talks are progressing, or are the Chinese starting to cave in a bit?
Well, clearly it's a good sign, but what is a sign worth? A sign could be wrong or a sign could be rescinded. Absolutely, it's good news. And here you go again. A tweet can have more power than an actual policy shift on the part of the Chinese. I'm actually, again, surprised with this news today. As much as Wall Street has gone up and down like a yo-yo with the slightest trade-related news, it's quite interesting today that it's subdued with this materially positive contribution here. Hopefully one can conclude from this that people are coming to their senses maybe. They're thrice bitten, 5 times shy, and be more cautious about interpreting this. Because at the end of the day, it's not a deal. It's an impact that could be changed tomorrow if they don't like something, or vice versa. But I would just say I'm cautiously optimistic about that. But bigger picture, I think it's very clear that neither side is in as much a hurry to get a deal as I thought originally. I have to fess up here and say earlier on in this, I really thought that it would not drag on that long. I thought that it was clearly in both sides' best interest, and they knew it, and that both sides would feel pain, and that would have potentially electoral consequences or other consequences in China, that would matter to the politicians to cause as much pain for their voters and serfs, or however you want to call them over there. But it matters, and I thought this would bring things to a quicker end, and I have to say it really hasn't. And, I wonder about that. And I'm coming to the view, this is just guessing on my part, so take it for what it's worth, all that you paid for it. But I'm finding myself more and more persuaded by the view that the Chinese will just wait Trump out. It seems very Chinese to me for them to say, it's only 2020. We can suffer a bit for a while. We can put down unrest like in Hong Kong if it crops up anywhere else. And, we'll get somebody more amenable than if the U.S. suffers for the election in 2020. That seems like a very classic Chinese checkers type move. And I suspect that's how this will play out. I could be wrong. I would love to see the whole thing resolved sooner. But if not, that's my base case expectation, let's say.
Well, of course, we know China doesn't do things by the quarter. They have 5, 10, 25, 50, 100-year plans. So perhaps a trade deal is a 5 or 10-year plan.
It could be. On the other hand, you listen to folks like Kyle Bass and some of the other China bears out there, and they make these very compelling cases for why this trouble is hurting China more than us, and why it's all a powder keg that's about to go up in flames. And it's very persuasive. I mean, I don't know more than Kyle Bass does about China, and I can't say he's wrong. It makes sense to me. It seems to me that he's right. It should cause them to have to change something soon or face major problems at home. My only problem with this is that I've seen other very intelligent sounding projections like this that just haven't come true. This whole thing, I think, it took people by surprise to begin with, and you can chalk that up to Trump being unpredictable. But it's just continued that way throughout. It seems to me the experts have called this wrong almost every turn of the way. And having embarrassed myself once on that already, with my projection that it would be over soon, I'm just going to watch it. I'm not going to try to tell people I know what's going to happen. I'm just going to watch it and caution people to be careful as long as it lasts.
Well, the U.S. farmers have lost the Chinese soybean market. Would China be quick to come back, or are they going to continue to use the soybeans being grown on the burnt-out areas of the Amazon?
Well, there you go. That's an interesting question, because it's not just, we'll buy soybeans over here tomorrow. There are contracts in place. And if you contract with new sources, you don't just turn around and dump those contracts. If you promise Washington that you're going to buy more soybeans, well, maybe you do. Maybe you end up with more soybeans than you need. I'm not sure how that works out. I'm just saying it's not safe to assume that, we get a deal tomorrow that suddenly they'll be back at the table buying the day after. Again, there are contracts in place, and that matters.
We'll have more with Lobo Tiggre right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, silver has finally had a nice little punch up, but hasn't been as aggressive as you thought it might have been.
It has been. I mean, if you look at it, it has easily been 2, 3, sometimes 4 times the price movement in gold over the last couple of months on the up days or the down days. Painfully last week on the down day, we saw silver fall quite a bit, more than gold, that Thursday last week. I'm not sure when this will air, but I'm talking about, what are we talking about? Thursday, September 12. No, 5. 12 is next Thursday. So Thursday, September 5, Gold and silver retreated sharply. Silver retreated much more sharply. Not happy news if you want to see silver go up. But I'll tell you what, I was very happy because this silver thing, it's hard to find good silver plays. And the best ones were already rising with silver and gold earlier on. And I was waiting for a correction like this to be able to, tick off some boxes on my shopping list. And I'm very happy to say that I was able to do that. And I'll tell you what, I'm even happier to say, I'm not sure how relevant this is to broader audiences, but I find it fascinating and perhaps confirmatory. But when this happened and silver and gold retreated last week, I got a lot of emails from my readers. And instead of emails saying, what's wrong? Has gold peaked? Is it all done? Or it wasn't that. It was, you could almost hear people laughing between the lines. It's like, this is great. I just bought some of this that was on my shopping list. People did the same thing I did. They saw the correction as an opportunity. If anything, there are still some things on my shopping list I wish we'd have a bit more correction to see. But I'm happy to do that because we're not seeing a retrace to recent lows. All this bull rally we've seen since June, the precious metals have wobbled. They do that. Nothing goes up in a straight line. But the pattern is a testing of recent highs rather than testing of recent lows. And that pattern still holds. So that tells me that the appetite in the market is still quite strong. And that makes a correction a buying opportunity, which my readers understand. So hopefully your audiences get that too. If you have things on your shopping list and we see a bit more weakness, the next big things that could move the markets, I think, aren't due until later this month and next month, particularly the Fed. So there's opportunity for weakness in the days ahead, just ahead. And I think that's great news for people, particularly those who are late to the show. Oh, and one more thing, since you asked about silver to begin with. Yes, silver has caught up with gold this year on a percent gain basis. You could say that since January up to last week, silver finally caught up and had gained almost, like 20-odd%, the same amount as gold has gained this year. So it's starting to catch up with gold. It lagged and it started to catch up. It's important confirmation of the gold breakout, but it's also, silver being more volatile, showing that it has more upside as it catches up. But it has not completely caught up. The gold-silver ratio is still way out of whack, and that puts more, not that the gold-silver ratio predicts higher silver prices, because gold prices could come down to make it close, but since they're both rising and since silver is catching up, then that tells us that the gold-silver ratio is likely to lessen, and that puts more upside on silver picks. So I'm talking a lot here. The bottom line is silver's starting to catch up. It's up as much as gold this year, but it's dropped so much lower. It still hasn't recovered to the 6-year highs that gold has. So silver's still relatively cheap compared to gold, and that gives silver, good quality silver plays, extra upside in the months ahead.
We've also talked in the past about silver being an industrial metal. Have they done all the solar heating or solar energy projects they plan to do, and does that lessen the demand on silver?
It's interesting that you bring that up because the Chinese have reduced their subsidies, and there's a big worry about that making for less silver demand, but we're really not seeing that. The markets evolve. They change. There's new uses for silver being discovered every day. And the alternative, what was once the alternative energy paradigm and now is the new energy paradigm, that's continuing. That's not stopping. So even without subsidies, the rates of growth may not be what they were before, but there's still growth. China is still cranking out these solar cells in, massive quantities, and they all use silver. So the demand is still rising. Even with a cooling Chinese economy, the demand and the use is still rising. But that said, I think this brings up an even more important point, and that is that there were some silver bears out there, even amongst the gold bulls, saying, well, silver isn't really a precious metal anymore. We don't use it for coins. It's used mostly for industry. It's a new industrial metal. So that's why the gold-silver ratio has gone from 60 or 50, where it was 20 years ago, to 80 or 90, where it's been recently, and is not coming back. Silver is no longer precious. It's just another industrial metal now. Well, nope. Because the news this year that has driven the precious metals up has been bad for industrial metals. The only one bucking the trend there is actually nickel, which is another subject. But silver catching up with gold this year is only due to precious metal demand. And that's very clear from all the economic factors out there and the performance of the other industrial metals. So this is important for anybody who is worried about silver no longer being precious. The data is now telling us it's not true. Its death has been much exaggerated.
We'll have more with Lobo Tiggre right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, battery metals. I remember a discussion with a friend in the investment industry about 10 years ago saying, well, lithium, there just isn't enough for batteries. Apparently there's lots of lithium being found now, but what about a more common metal? Is it in short supply and it's used in batteries?
Well, actually, your friend was misinformed. Lithium is not rare. I mean, heck, if you look at the table of elements, the periodic table, it's right after hydrogen. It's actually an extremely common metal. Now, economic concentrations are another matter. There's lithium in the ocean. There are lithium salts around the world. It's abundant, but it's diffuse. That said, even at the time when your friend would have been speaking, there's so much lithium being produced as a byproduct of other salt production. The biggest producer in the world, SQM, when this whole battery craze started, a decade and a half ago, they were pumping excess lithium back into the ground because they were in pursuit of potassium. They were literally digging up more, or it's a solution mining, so not really digging, but they were extracting more lithium than the market could bear. So they were pumping it back into the ground. So I'm sorry, your friend was misinformed. It's not rare. It's very common, and this is one reason why I've only periodically been a lithium bull, because you need the demand to outstrip the supply, because the supply always catches up eventually. So temporarily there can be lithium price spikes, but it's not sustainable. On the other hand, other metals that are in the batteries, some of those are much rarer, like cobalt. Now that is a copper byproduct, so that can also flood the market at times, but it is one that is harder to come by than lithium for sure. And the one that we mentioned earlier, nickel, is interesting. It's not a rare metal, but it's one that you use a lot of in many industrial applications, including these batteries. There's more nickel in these batteries than there is lithium. And it's not replaceable. As the price of cobalt went up last year, there were new battery designs brought in that used less cobalt. But guess what? They all use nickel just as much. So that's interesting. And if you've noticed, and your astute listeners I'm sure may have noticed, that of the industrial metals, the one outlier is in fact nickel right now. Back up over $8 a pound. It's actually up more than gold or silver over the last year. And why is that? Well, it's partly because of the demand. Yes, it's part of the new energy paradigm. It's also part of the old industrial paradigm. It's after copper. It's one of those metals that's in constant high use. But we've had supply disruptions. We've had issues in Indonesia and Philippines. There are specific supply constraints that have put a real supply crunch. And you can see this if you look at the publicly available data on, say, the LME stocks. You can see those just being drained over the last 6 months, just wiped out, right? People taking the nickel off the market. So even though there's all this concern about the cooling global economy, Germany may in fact be in recession already. China, the GDP numbers are looking astonishingly un-Chinese of late. and yield curve inversions in the U.S. have people worried, and I think quite rightly so, about a recession coming to the U.S. All this stuff out there, very bearish for Dr. Copper and all the other industrial metals, including nickel. But nickel prices are going up. Well, that's because of these really politically induced disruptions I'm talking about. So maybe that's great. Maybe nickel is the one to bet on. The problem, though, with political disruptions is that they can be reversed. It's one thing if you just aren't mining enough of it, or there just haven't been enough discoveries, right? There's just not enough of the metal to go around. That's a great reason to drive prices up, because it can't be fixed. It doesn't go away overnight. It takes decades of exploration to fix that problem. Whereas, if prices go up and the Indonesians or whomever decide, we can profit better if we change our policy, the policy decision can be reversed overnight, stroke of a pen. Makes me a little nervous. And don't get me wrong, I think the actual mine supply versus demand picture looks very bullish for nickel going forward. It's one of the industrial metals I'm most bullish on, in fact. I'm just concerned about jumping on the bandwagon with prices up already in the face of serious economic bad news. So it's not a no-risk play right now for me.
Of course, too, we've seen this happen with mining around the world. You have a productive mine and it's making money, and then the local government decides, well, if they're making money and we're taxing them at 5%, why don't we make it 25%? And then the mine closes down and production moves elsewhere. Is that what could happen in the Philippines and Indonesia?
Well, I think these guys are smarter than that. They understand that you can't kill the goose that lays the golden eggs. And it's quite interesting that they've made no moves to nationalize at all. And I think they've run their spreadsheets. They have a pretty good idea of how much, I don't know what's the right goose metaphor here, so I don't switch metaphors. How many feathers they can pluck from the goose without killing it, or how many eggs they can take without destroying the supply going forward. I'm not in favor of what they're doing. I'm just saying I think they're smart enough not to completely destroy the whole setup that they have there. That said, it is disruptive, and you never know. A different politician could come in and change things. Just remember incidences remember the rare earths and how they all went up 10 years ago like crazy because the Chinese had a policy decision restricting or taxing exports in an effort to do very much like what they're doing in Indonesia now, to encourage more advanced processing. And instead of just being an exporter of raw materials, they want people to build smelters there and export higher value products. So the Chinese did that with rare earths 10 years ago. Prices went nuts. I remember 10-baggers in the stocks on some of those rare earth plays. But we got out fast. We took profits when we could because it was a political decision, and I was right. After a while, the Chinese got the technology transfer they wanted, and they reversed their decisions, and the prices for those rare earths came crashing back down again.
Uranium, is there a chance it's going to pick up?
Well, I would not say there's a chance. That one is as close to a sure thing as comes in the resource sector, in my view. Now, that doesn't mean tomorrow, of course. It doesn't mean maybe even this year. But the fundamental fact is that the demand is still there. It would take decades to replace the uranium used in nuclear power plants today. Yes, there are plants being shut down, but there are more under construction and planned that are being shut down, and far more if you look at what's proposed on top of that. The demand is there. The supply is being destroyed. This is not an if question, but a when question, as our friend Rick Rule likes to say. When that when is, that's the million-dollar question. The opportunity right now, though, is that this whole chaos surrounding the Section 232 petition that some U.S. producers submitted to the administration in the United States for protection has really roiled the market, and it's given buyers a reason actually to stay out of the market until there's clarity on that. And some of the non-U.S. producers are telling everybody, Section 232 is dead, yay, it's gone. But that's not actually true. Trump didn't put protections in place, but he set up a study group. And just recently, speaking of tweets, we had word that he's considering the possibility of requiring U.S. agencies and the military to buy, and I actually think the military may already be required to buy U.S. uranium. But the point is that by executive order, he can increase demand for U.S. uranium and boost the U.S. production without tariffs or upsetting, or having to go through Congress or upsetting trading partners too much. That's hot off the presses. That's just out now, the last couple of days. So it's interesting to see that this 232 kerfuffle has put a lot of great stocks on sale. It's injected a lot of uncertainty here. And it may, in fact, be depressing the price of uranium because certain buyers are going to wait for clarity before they come back to the market. When that gets cleared up, which maybe October 14, when the group is supposed to report, it may be sooner if we get a tweet. We don't know. But when that clears up, it could actually, take a cork out of the whole process here, and we could see uranium do much better in the nearer term than many people are now forecasting. But if not, I'm not promising that. I'm saying that's extra upside. It's a potential tailwind. But if not, I think over the next 2 years, I'm willing to go out on a limb there and say within the next 2 years, I think uranium will make shareholders in uranium companies very, very happy.
There's word the Hong Kong Stock Exchange has made an unexpected bid for the London Stock Exchange, offering $36 billion plus. Why would they do that?
That's a little out of my wheelhouse, but I'll tell you, my first reaction when I saw that was like, yeah, right, that'll ever happen. You remember when the Chinese wanted to buy Noranda, a great Canadian mining company, and why shouldn't they buy Noranda? They had the cash. Why not? Well, there were some reasons that were found somehow to block the Chinese from buying that, national security or whatever. I don't remember what the excuse given was. But I can certainly imagine the regulators in the UK saying, no, we can't have Chinese owners of the London Stock Exchange that has national security implications. Our whole financial infrastructure could be subject to foreign sabotage or I don't know what. I mean, I'm not trying to put ideas into their heads or whatever. I think it's already there. I think, this deal has the chances of a snowball in a very warm place. But it's interesting. And the geopolitical chess game continues.
Anything else, Lobo, we should be taking a look at?
I just want to reiterate something that should be clear from what we said, but may not be because we covered a lot of topics. And that is, I feel very strongly about the precious metals breakout. The silver confirmation of that, I think, is important. And what else can I say than that I am deploying my own cash here? I have used the recent correction as a buying opportunity. I hope to do more of that. So I'm putting my money where my mouth is. If I'm wrong, I will personally pay a price. But I really don't think I am. And, it's amazing to see mainstream media talking about gold and silver. Even Jared Blickery, the chart guy at Yahoo Finance, who usually talks about, Tesla and the FANG stocks and stuff, he's been charting silver. And not even just gold, but silver, on Yahoo Finance. And it's not just them, it's all over the place on mainstream media. I can't quantify this for you. I can't give you a number, but my sense from watching these markets over the last 15 years is that, the market has the bit in its mouth about the precious metals. And with all the fears, and it's not just the trade war, there's a lot of things going on in the world right now, and the length of the bull market on Wall Street, I think this could really become the next flavor of the day. I think people remember how well gold did in the aftermath of the crash of 2008. I think people are worried about equities in general. And I think that is very, very bullish for precious metals going forward. So that's where I'm focusing my own buying today.
Lobo, thank you so much for chatting with us.
Well, thank you, Jim. Much appreciated.
My guest has been Lobo Tiggre from the independentspeculator.com. He was speaking to us from Puerto Rico. I'm Jim Goddard. Thank you very much for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.